167 years of history over in a single weekend. The emergency sale of Credit Suisse, one of the banking world's biggest names, to fellow Swiss bank UBS is raising fresh fears about the state of the financial system. European Central Bank President Christine Lagarde trying to inject some calm into a nervy market.
The financial tensions that we have observed for the last 10 days or so are not trivial. I'm not, minimizing, but I'm also saying that we have a strong banking sector, much stronger than it was during the last great financial crisis.
There is now only one big name in Swiss banking, but UBS dropped some heavy hints that it won't have room for all its new employees.
UBS intends to downsize Credit Suisse's investment banking business and align it with our conservative risk culture.
One Credit Suisse worker described the mood in the London office. We've disguised their voice.
There's a lot of empty desks. I suspect a lot of people are, frantically trying to rush to other employers, other banks. Your days definitely feel numbered. There's a lot of anger towards top management that the actions of a few over a period of time cost a lot of people their job. But sadness is the primary emotion.
And since Credit Suisse's collapse followed separate crises at Silicon Valley Bank and other American banks, some are asking, is history repeating itself? Experts say no.
This is not another 2008 situation. We do not have a massively interconnected banking system. We do not have totally inadequate levels of capital. We're not at the end of a big bull run in mortgage debt origination and underwriting.
London has so far avoided most of the bumps in this roller coaster, but no one here is relaxed.
Finance is part of the plumbing that underlies the economy, all of our lives. So while the events in Switzerland and the US might feel like a long way away, the Bank of England is still concerned. First, because while it thinks the financial system might be in a better place than it was in 2008, there's still a chance that investors might get spooked. Second, because if banks decide they don't want to lend out as much, then we have a potential credit crunch with real economic consequences.
Some think the bank may pause interest rate increases even as inflation remains high. It might seem odd that the fate of distant banks is causing tremors here, but one thing we learnt from the last crisis is when banks go bad, we all feel the consequences. Ed Conway, Sky News.